Senator Toomey joins us now. He serves on the Senate Banking Committee. And just reading between the lines with some of your comments, Senator, were you as big a fan of the Bernanke-Yellen tenure, or as part of your respect for or admiration for Jay Powell that he's tried to rein it in and tried to maybe reverse what might have been some irresponsible or profligate policy?
Well, you're hitting the nail on the head, Joe, as far as I'm concerned. I thought that the very, very long extended period of zero interest rates and negative real interest rates was very dangerous. Long after the crisis had passed, the Fed was engaged in a monetary experiment that we've never seen, and I just thought it was a very bad idea. And Chairman Powell, I think he resisted a lot of that policy while he was there, and as chairman, he's the guy who has been normalizing. Rates have been increased to what has got to be close to a neutral rate. Balance sheet is gradually being wound down. He has done it in a way that has really been received relatively calmly by the markets, generally speaking.
Yeah.
You can argue that they overshot by a quarter point in December. Fair enough. That may have been the case. But look, this has gone more smoothly than I thought it would, and Chairman Powell deserves a lot of credit.
Probably not surprising. I mean, I can remember, in my college days, at 2 a.m. they'd come and say, we got to close. This is the last call. And it's like, you don't like the people that are moving the punch bowl. It's just natural.
They're not the most popular people in town, right?
I mean, it's so easy to love someone that keeps rates at zero. But is it possible, Senator, that we haven't appreciated technology and innovation and productivity and Amazon and the internet enough to see that maybe the old interest rate levels based on inflation are anachronistic, and we don't, that we're in a new era? I hate to say that.
No, I think you're absolutely right. There's something going on that's different, right? I mean, the neutral rate has got to be lower today than it used to be. How else do you explain all of the Treasury yield curves? Although I think the interference of central banks, I mean, the sovereign debt market in Europe is absurd, right? The idea that you have a German 10-year that yields 40 basis points below zero, just to me, that just doesn't make any sense. But your point, I think, is essentially correct, and I will say one other thing. I think we probably still systematically overstate inflation because of the constant product improvements that are harder to quantify, right? We can register the change in the price of an apple that you eat, but the Apple product that's in your pocket gets better every time a new one comes out, and it's harder to capture that. So, yeah, I think technology is absolutely changing markets and the economy in profound ways.
It would be great if it was based on inflation. It wouldn't be great if we were tethered to these low rates because of the crappy economic policies over in socialism land, over in Europe. And that's really what we're seeing right now. I mean, you look at trying to run Italy with the same currency as some of the... and that's not working. And so we're in a global interest rate environment now, and maybe we're being held artificially low by their inability to grow.
I think there's some of that. I really do. It's hard for me to imagine that Euroland having negative nominal interest rates, Japan being basically at zero for, decades now. It's hard to believe that doesn't have some effect, some ability to artificially lower our interest rates. But still, at the end of the day, I think, this judgment that the Fed has to make, clearly there's been a deceleration of growth in the U.S. I think we're still growing. I think fundamentals are still good, but clearly they're not quite as strong as they were in the first quarter, and there are more threats emerging. And as I say, with the entire Treasury yield curve trading, at least a quarter point, in most cases more than that, below Fed funds, I think that's why the market is expecting a rate cut coming up.
Senator Toomey, Jason Trennert, how are you?
Great.
Good to see you.
Good to see you.
Do you think populism in some ways is a result of central bank policies, which is to say that monetary policy being so easy has essentially benefited, for lack of a better term, the wrong people. Wealthy people have disproportionately benefited. The average person, the average guy, gets zero on his savings or less. And again, maybe going back to Joe's point, what can you do, again, if you have $13 trillion of negative yielding sovereign debt around the world? What can the Fed do really to escape this black hole that you find yourself in without closed system?
Well, I mean, to your point, I think the answer is yes. I think the Fed's behavior when they held rates at zero for such an extended period probably did contribute to some understandable resentment, right? Financial assets, people who had accumulated some wealth, saw their wealth increase in value, whereas the guy who's living from paycheck to paycheck and maybe has some modest savings probably had that in the bank on a deposit basis, earning him zero. So, yeah, that wasn't really very fair. And, by the way, it didn't give us booming economic growth because the problems were really on the supply side. So, at least I think our policies are much better now. We've got a much more constructive tax regime. We've rolled back some of the excessive regulation. We've seen a tremendous expansion on the supply side. I think that's also part of the reason we've got no inflation.
You don't blame President Trump, do you? I mean, you know what? And I know he for his maybe not the most noble reasons. He wants to be able to brag about the economy. He wants to win. Sure. You know, it's all about his scorecard on how he's doing. But a stronger dollar really does not help, at least in his mind, in terms of trade imbalances and everything else. I mean, you see where he's coming from, right?
I totally understand. Look, what president doesn't prefer lower interest rates? I'm not sure I can think of one. I think that's the norm for a president. Right. That doesn't mean it's always the best and appropriate thing for the economy.
But it doesn't mean it's not, though.
Sometimes it makes sense, and sometimes it's not such a good idea. I think the Fed is taking a very prudent approach. They're going to watch the data. The market is convinced we're going to get a rate reduction at the end of this month. The market's probably right, I suppose. Let's take this carefully and prudently, one step at a time.
He could have kept yelling. You know, I mean,
I'm in favor of having Chairman Powell there.
So, Senator Toomey, clearly you're a supporter of Chairman Powell. At the same time, you know, if Chairman, not too long ago, prior to the jobs data, the markets believed that the Fed was going to cut by 50 basis points. Right. That would diverge from where you think interest rates should be headed in this environment. They should be moving towards normalization. So I'm wondering, do you support Chair Powell because of your belief in the independence of the Fed, or do you support Chair Powell because right now he has been the person who has been trying to move towards normalization?
Really, it's both, and I'm not suggesting that I know exactly where the Fed funds rate should be. Like, I think the Fed is in a better position to make that call, and the people there now are taking, I think, a much more prudent approach than what we had, some years ago. But I do think it's also important that the Fed have some degree of independence. Now, look, I think they took their independence and they ran a little wild for a period in the last number of years when they kept rates at zero for an extended period of time. But now we've got different folks there, and I think they're running the shop quite prudently.
So if he came out and cut by 50 basis points in July or whenever, you would still support him?
Yeah, I'd be a little.
Change?
I would be a little bit surprised based on the data that I have right now. I would want to just understand the rationale behind it, but I don't want to judge that today. We're going to have more data come out between now and then, and so obviously that would also inform all of our judgment about where the Fed funds rate should be. And again, the other thing I would say, I actually think. I understand it's important directionally. I understand it's important with respect to market expectations. But I actually don't think that the economy, the strength of the economy, hinges on whether the Fed funds rate is 25 basis points higher or lower than where it is right today.
I was going to mention that what happened? You lived in a time where most people didn't know who the Fed chairman was.
Right,
Senator. I mean,
Joe, remember when we stopped everything on all our trading desks and watched what the money supply number was?
I know.
The only thing that mattered was M1, M2.
Why are
they
in maybe it's a crisis. Either that or it's just social media or something. A lot of things in this. I look around and a lot of things I don't understand. I think I sound like Nevercracker, like the old guy, get off my lawn. But I don't understand. I don't understand why. I'm going to talk to Kramer later today. He's like, buy companies that do well. Why are we basing investment decisions on what Jay Powell says to politicians? I know.
I totally agree with
maddening. Senator, thank you.